In. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're speaking about Sona BLW Precision Forgings. It's also called Sona Comstar. And just to give you a snapshot of the earnings for the fourth quarter, revenues have grown about 35%. You have PAT growth of 54%. You have EBITDA margins that have come in strong at 27.1%. There's quite a bit to talk about with the management. And in fact, I'm joined by the Managing Director and Group Chief Executive Officer, Vivek Vikram Singh. Thank you so much, Vivek, for taking the time. Let's start with the revenue number because I believe this is the highest quarterly run rate. What is the primary driver for that growth?
So thank you for having me, Alex. First conversation. So because it's the first conversation, I think I should mention, yes, this was our best quarter ever, but the last quarter was the best quarter ever before that, and the last quarter was... So when you are on a fairly decent growth trajectory, these things tend to happen. I don't think these milestones, there is too much except to just see if you're on the right trajectory. The trajectory and the direction is more important. I think this quarter what happened is we consumed a lot of our order book and a lot of those programs came online and started, hence you got that big jump.
2,800
so this
crores.
Is how, yeah. Basically, we consumed quite a bit of it and those orders came online. So that's how growth came. Because in an industry, if you look at our business, I think we were 1,200 something odd crores about 3 years ago, right? FY21. FY20 was 1,200 something crore. FY21 was 1,560. Then we went to 2,100 something, and this year is 2,600. So every year it's 25% plus growth. The industry, however, in that same time period, if you look at global light vehicle sales, has actually gone from 85 million to 80 million. So in a shrinking market, how you grow is basically off your own steam, which is you win new orders, then you execute them, and that's how you grow. And that's been our way. So there will be, a few quarters where it'll look like it's flat, and then suddenly there'll be a jump. Because ours is a business that you look at on an annual basis, frankly, than a quarterly basis. So this quarter, if you look at, it looks spectacular over the last quarter. But if you look at the whole year, I think that's a more meaningful conversation that we grew at 26% year on year. And that's what my takeaway is. Yes, because some quarters had less than 25, some quarters had more than 25 growth.
That's interesting. And I was actually, you've preempted one of my questions because I was going to talk about the underlying industry. And I was going to talk about the trajectory of your growth because you've got a very interesting slide in your presentation that talks about just that. So my next question to you, and okay, let's talk about the financial year then. And we're talking about the trajectory that you've had. You've already described that over 3 years. With the underlying industry likely to continue to see a little bit of pain, particularly in the US and in Europe, is that trajectory something that you will continue to achieve?
Good question, Alex. So, and I think it is one that I've wanted to answer, which is why I kind of mentioned it, right? That why are we growing in an industry that's declining? There are two reasons. One is we keep making new products. So we actually keep adding new revenue streams to our growth story. Second is we are in the part of the industry that is actually growing. We are more electric vehicle focused, which used to be a much smaller segment, which is growing much faster than the rest of the industry. So if you look at just electric vehicles in the last 3 years, that growth rate is pretty impressive. And that's what we are riding. So even within a larger industry, there can be smaller sections of it or parts of it that have high growth. The better companies find those and instead of fighting the future, make the future their friend and get on to those trends. Okay. That's what we've done fairly reasonably well. And that trend does not stop here. Okay. So Alex, as you know, in the next 3-4 years, if anything, that will solidify even more.
Yes.
And order book is already secured, right? So I kind of can predict slightly more with granularity. 3-4 years are pretty decent.
So I will come to that one specific order that there's a lot of buzz around. But before that, 8,000 crores added to your order book in FY23, and I see that there is a very sharp shift in the net orders in terms of what you just spoke about. There is more going towards EV, and that seems to be a strategy that you've employed and that's worked in your favor. Do we see that moving even further, that skew that takes place? And does that, in fact, move the revenue mix even further away from ICE? ICE is now only about 15% of your revenue mix.
Yeah. So great question, Alex. So see, all strategy is choice, right? We chose to be on this path and walk on this path in 2016, 2017. We saw this major shift coming. It was nascent at that point, and we pivoted all our product portfolio towards that direction. I think it's paid off well. The trends that you have with these larger industries, multi-trillion industries, are multi-year. I think they're 15-year cycle. However, we are not sitting on our laurels. So we did that. We took that decision, I think, 6-7 years ago. Now I think it is time to move on to another trend that's happening, which is vehicles are becoming more and more intelligent. I'm not going to the word autonomous because I think people immediately confuse that with fully autonomous driving. There are many stages to reach there. So that's why I choose the word intelligence. That vehicles themselves and the systems and subsystems inside them will continue to get more and more intelligent. Intelligent basically means the ability to perceive your environment and then to process that information about the environment into intelligent decisions. So it's sensing and then having some kind of software to actually act. So that's a new field that we have started. After 5 years, it should be a fairly meaningful part of our revenue as well. And that's in a nutshell how we think about the world we operate in. Another point that I wanted to mention, and I think this is the right time, when you have a quarter in which your EBITDA grows 50%, that's the quarter you say that quarterly or Q-on-Q is not the right way to look at our business. And we've been around for 8 years. I think I said it in the earnings call also that we've had 2 quarters out of this 8, which was 0 to 10% YOY growth, 2 quarters which had 10 to 25, 2 quarters with 25 to 50, and 2 quarters with above 50. So this data doesn't imply much when you look at any of these data points in isolation. So that's what I meant when I said annually is a good way. If left to me, we should look at it in blocks of 3 years, because everything you do, let's say I start working on a product today and I succeed on every step, the time it actually converts to revenue would be 3 years out, because that's the cycle.
So I would buy into that, except I think your shareholders are keen to know what you're doing in the very near future as well. So we'll have to look at quarterly as well, because that is something that they're looking at. But sure, we can talk about the year. I want to specifically ask about the profit and the margins for the quarter, and then we'll move to that question that I've been holding in reserve. You've seen it at 27.1% for the quarter gone by. I'm actually curious whether this is a factor of the mix that you have been driving towards, or is it also that you're seeing tailwinds on the raw material side, that you're seeing some easing of pressure?
Mostly operating leverage, Alex. Okay. So if you look at it just from last year to now and just do the growth, that 35% is the growth of revenue YOY, but EBITDA has grown by 50. Most of it is operating leverage. There has been some cooling in commodity. I think copper, aluminium, and alloy steel is not very far from where it was this time last year. So it's not, that one hasn't come off that much. Others have. And let's see if inflation keeps cooling, there should be some more benefit. However, this is the range, Alex, 25 to 27%. And I keep repeating this point every time I speak to anyone, that this has been our range for the last 20 years. This is the range we eventually will operate in. If it is, we do not also aspire to a much, much higher margin, to be honest, because if it is, that also shows that are we trading? See, there is a balance between growth, margin, and return. Sometimes you can maximize on one front and let go or ignore the other two. And as good managers, our job is to try and manage all three. And if you look at our history, we have managed to hold all three above 25%, at least for the time I've been associated with the company, which is about 8 years.
Yeah, and you have to stay competitive, especially when you're delving into new markets, which brings me to that question that I've been meaning to ask you, which is there's a lot of buzz about this new order win that you've got in North America, 500 crores. You said that this opens up a lot of avenues for you. How does it fit into the strategic shift that you've been talking about, and how would you describe to your shareholders how important this is? Why is this so important?
Three reasons I think that I like to. By the way, also, our shareholders are the owners of the company, right? So whenever we do this communication, it is to them that we are talking as managers and stewards of their property.
Right.
All shareholders are not actually very interested in quarter by quarter, by the way. Quite a lot of them are fairly long-term people who only ask me questions about 5-6 years.
Interesting.
I think there are all kinds of shareholders that we have with different investment horizons. I try and give to everyone as honestly as transparently as I can the maximum amount of information.
Fair point.
Right. So now I'll come to it. Three reasons why this win is important. One, this is the first time we're getting into commercial vehicle differential assemblies and gearbox parts. We have only done differential gears for commercial vehicle before in the ICE world. We had never actually done a full differential assembly. So it opens up a new one. I think we waited for this because commercial vehicle electrification was far slower than passenger vehicle electrification, especially in North America and Europe. Now that trend is changing, I think it's opening up of a whole new market segment, right? Second, why it's important is this is the first time we are doing two products which are intermediate gears and input shaft, which means, and if you add the final gear differential assembly to it, basically we are doing all the components inside a EV gearbox. This is the first time we've done that. So it suddenly almost doubles your addressable market immediately while opening up a new market segment that did not exist before. And I'd say third, and this is also important from a product roadmap perspective, that we have always stated, and it is out there in our roadmap, that our end goal is that whole electric drive unit. I think this is one more tangible, strong, firm step in that direction of having the whole thing. And to say that we want to and we will one day own that space between the battery and the wheel, everything that is between that, we want to be able to do. And this is another step towards that ambition, I would say.
Okay, interesting. The execution of this order is going to be in the second half of FY24. In the interim, I'm sure that you're scouting other opportunities in the space as well. Is anything in the works that perhaps you can tell us about?
Oh, we are always in stages of negotiation and business development process. But Alex, you'll also appreciate that no deal is closed till it's closed.
Absolutely.
And you can come to the last stage and then it won't happen. So till it's done, and every quarter we report on whatever we won that quarter. And only when we get the purchase order do we talk about it. Because again, when talking to your owners, you should be careful not to let expectations run too high. You shouldn't signal things ahead of time. So we try and...
Could you give us a sense, and this is my last question, you've been growing at a stellar pace, and I think that also requires investment in enhancing capacity, and I think that that's something that you've decided on. Could you give us some details on that?
Yes. So if I take the 3 years, FY24, 25, 26, between 1,000 to 1,100 crores would be our capex just to execute the order book as of today. If we win more orders, of course, that goes up. And hopefully we will win more orders and that will go up.
I will look forward to speaking to you at the end of the current quarter, of course, because I like to speak to you more often. This was our first chat. Thank you so much, though, Vivek, for taking the time. Pleasure speaking with you.
Thank you, Alex. Thank you.